And this is Ranjan joining you from Chennai Smart Finance. And as you know, we are into the business of academics as well as the softwares development and wealth management. So this is all our activities are known to all of you. And today the subject of our discussion is two best option strategies suitable for the budget day volatility. And this particular event normally we used to hold every year before the budget, and it is in the different topic name, and every year before the budget session we used to hold such kind of events. So why the budget is so important for a trader and what happens during the budget, so that is very important for us to understand. So as you know, the union budget, which was earlier the March 1st or 2nd, so now it is being preponed to the February. So here during the union budget, lot of taxation related decisions are being taken, lot of expenditures are being planned. So government used to prioritize specific sectors. Specific sectors will get the priority spending based on the people's need. So during this budget, you'll find out lot of re-ratings or investments will flow from one sector to other. So that kind of scenarios will happen during the budget time. So first we will interpret this budget and how market has behaved during the budget. So here I just taken some web informations from the different websites. I have just taken some of the info. So these are the movements of the Nifty during the budget day. So here 26th Feb 99, when the budget was presented, 4% Nifty clocked same way. So 2000 4% down, and this kind of movement what you are seeing in the index, so specifically for the budget day. And 2020 budget, which has happened in the February 1st, you can say that on that day you have settled at a 2.43% negative in the Sensex, and Nifty also 2.5% of negative growth it has given in 2020 budget. Certain decisions of the government or certain priority spending list did not go well with the investors, or it has created a short-term doubt, suspicion, whatever definition you want to give. So that particular day you have seen a bigger movement. So it is a domestic event. Budget is a domestic event. It is not an international event, or it is not a global event. So that doesn't mean that post-budget market will never rise, or that doesn't mean that post-budget there should not be any movement. On the day of budget, there will be a great oscillation. So we need to take the benefit of that. So on the budget day, what happens? More volatility means wider price oscillations, means the volatility will be more. So wider price oscillations will happen on that day. So that is one of the expectations. Wider price oscillations lead to increase in implied volatility of options. Once the volatility goes up of the underlying asset, you will see the increase in the IV of the options. And this increase in IV will result in the higher theta, or the time value of the options. So these are the three things is internally going to happen in all option premiums. Wider price oscillations, that will lead to increase in IV, that will again lead to the increase in theta. So how we can benefit from there? Those who are associated with the smart finance for a long period of time, you would have seen in the 2017 my video, This also link I have shared with you. Once again, I will tell you, those who have joined the program, please download the presentation from the hands out section just above the chat box where you are typing yes or no or asking my questions. Just above that there will be handout sections. There one file I have given, so that the PDF file having the same presentations you can download. So in my 2017 this video I have outlined 3 option strategies which will be suitable for budget day. So today again 2 more you are going to learn. So 5 different strategies you are going to learn. So cross calendar bull and bear spread. So this is the thing I have told you in the 2017 video. So what this strategy says, just one small recap I can give on these 3 strategies. Buying current month call and put 2 lots and selling near month call and put 1 lot. So all these strategies what we are going to form during the budget day, it will be trend neutral, means either market goes up or fall down, we must make some money. Same time, it should not have a positive theta, positive theta or negative theta, means it should be in the theta terms also it should be balanced. So that is very important for us. So this and that strategy should be delta zero strategy. So those who are technically sound in this option subject, so for them delta must be zero and it should be market neutral strategies. Those who are not technically understanding these Greek terms, they can simply look into this strategy names. Cross calendar bull and bear spread. This is a market neutral strategy. Buying current month call and put 2 lots, selling near month call and put 1 lot. Why we are doing so? Because IVs are more, the selling side options will be having the higher time components and wider price oscillations will result a good profit. For that only we are making. But this strategy will not be suitable when there is no such short-term expectation of wider price movement. So this is only for this kind of movements. When you expect on that particular day there is a huge movement is going to happen. So if Nifty is at 14,200, sell 14,200 call and put 1 lot for March month expiry, which is near month, and buy for the February. February is the budget is happening. So we are sitting in the January. January is going to, after 2 days the expiry will come. So January I am not considering. So this is the one strategy I have told on 2017. Second, my strategy were ratio call and put spread. So this is also very simple strategy. This also suitable for wide price movements. When you expect there is a wide range of price movement can happen, then you can take a call in this strategy. This strategy has the similar nature of the cross calendar bull and bear spread. However, what happens here, you are selling and buying the same month contract in the ratio of 1:2, means 1 lot you will be selling, 2 lots you will be buying. So for example, I have taken it here, 14,200 call options and put options of March month expiry you are selling and buying 14,300 and 14,100 put, 14,300 call, the next higher strike, and 14,100 put, 2 lots. So this is for the ratio call and put spread example. Third strategy I have recommended on those years, net debit calendar spread. If Nifty is at 14,200, then buy 14,200 call and put option of March expiry and sell for the February expiry. So this particular strategy, little bit of tweaking is required. Means you cannot take for the 14,200 strike. You need to choose a different strike. So suppose if Nifty is at 14,200 and you wish to form a net debit calendar spread, very carefully listen to this. Calendar spread is one of the best strategy always I used to recommend, and it is one of the safest strategy. However, you need to initiate it in a proper way. So here what is happening? Net debit is happening. Means March month you are buying and February you are selling. So by this process, every call option you have specific debit, put option also have specific debit. So if you are forming this net debit calendar spread, choose the strike in such a way that the spread, average spread should not go above 60 points. Very carefully you 60 points average spread. So when you are buying a March, selling the February, you are paying some money to the market for both call and put. So that is known as your spread. That spread should not cross 60. Then you must ask me why this is 60? Why not 100? Why not 150? Why not 20? So why you are sticking upon this is 60? So it has a bigger technical meanings behind it. So whenever we form the net debit calendar spread, we need to look into, because you are buying the March month and selling the February month, and there we need the theta. So here March months will be having a higher theta and time value decay, and February will be having a lower theta. So by this process, we require to make any strategy as a stable in terms of theta. The theta should not go beyond 5 rupees or 5 units plus or minus whatever may be. So any theta neutral strategy must have a plus or minus 5 points of theta, 5 rupees of theta in terms of Nifty. When it comes to the bank Nifty and other things, its parameter differs. So to maintain this theta at a stable range, we require this is 60 point of spread. Whenever the spread varies beyond 60, it becomes 80, 90 or 100. So this theta also changes. So that won't give you any profit. So while forming net debit calendar spreads, keep in mind you should choose the call strikes and put strikes in such a way that the spread should not be for debit calendar spread should not be more than 60 points, or average spread should be 60 points. So if there is a wider price movement happens, you will get benefited. So these are the three strategies I have recommended in the year 2017 on the same subject of option strategy to benefit from the budget day volatility. So this particular time, I am recommending you two more strategies. These two more strategies will be having slight complexity in between them. Credit box spread in Nifty and short Christmas tree spread in the call and put with a 2x approach. So these two strategies I am recommending you for the budget session. So you can either take double in terms of theta. So because if I talk about theta, then many people, those who do not know about theta, they will feel bored. So in terms of spread, if you can follow, so that will be easy for your understanding. So for that reason only I told. So there are two strategies I am going to recommend for this particular budget. One is credit box spread. Here too also some catch is there, I will tell you. Second is short Christmas tree spread with call and put both with 2x approach. So here too also these two monthly expiry you can take, not weekly expiry. Weekly expiry is a very toxic instrument and it has lots and lots of loopholes in it. IV calculation itself is wrong there. Weekly expiry it is a very toxic instrument. So that is none of the, because many times you will find out that their IVs are greater than 100. So when you are finding out IV of a option is greater than 100, many times you will find out implied volatility of the options. When implied volatility of any option goes above 100, that particular time you are assuming, not assuming, that particular time you are defining the delta of the option is greater than 1, or less than -1. So which is not true. Delta of a call option cannot go beyond 1, cannot fall beyond -1. But if IV goes above 100, this is possible. So that's the reason why I used to tell any instrument anywhere it gives you a IV above 100, that time the very definition of Greeks it violates. So it is better not to trade in those options. So there you cannot form any delta neutral. Even though if you form, it will be wrong because you are assuming delta of option greater than 1, delta of future also greater than 1 in those cases. So which is not true at all. So fine. So we'll come to this particular subject of credit box spread and short Christmas tree spread. So these two things we need to understand very carefully. What is a short Christmas tree spread in the call and put? I've given a very simple example. If Nifty is at 14,200, you can sell 14,200 call option one lot. Next strike, because 50 also you have a strike, 14,250 also you have a strike, but liquidity issue will be there. 14,300 call option you are buying 3 lots. So do not get confused with the butterfly strategy and Christmas tree strategy. Butterfly strategy is completely aligned, but Christmas tree strategy is slightly different. Butterfly you have 1, 2 and 1. So here you have 1, 3 and 2. So both the proportion is different. So here you sell 14,200 call one lot, you buy 14,300 call options 3 lot, and you sell 14,500 call option 2 lot. So here X is 100. So I have told you 2X. So 2X is 200. So here your first sell call and buy call, between them there is a 100-point difference. So the next sell should be 200-point difference. Similar approach you have to follow because you need to maintain it as a market neutral strategy. So for that reason, you have to similar approach you have to follow for the put options. 14,200 put option 1 lot sell, buying 14,100 put option 3 lots and 2x. So here x is 100 point, 2x is 200 points. So sell 13,900 put option 2 lots. And this Christmas tree strategy gives you profit. Short Christmas tree strategy gives you the profit if the price move above the upper strike or the lower strike, 14,500 above or 13,900 below. If the index manage to move, you will be clocking the highest profit. So here, so this is the idea, because we are expecting a wide price oscillations, and to take benefit of that, we are involving this kind of an arrangement. So you must ask me why there is a X and 2X approach. Can't you take the same X and X approach? The reason here why I am just infusing some delta inside that. Since there is a wider price oscillation is expected, so by this use of 2x, though my net delta is 0, however in the call, individual call side, there is a positive delta. Individual put side, I have some negative delta. So by this process, I am just inducing some amount of delta into the strategy so that my profit can be enhanced, profit can be improvised, or profit can be more. So for that reason only, this is the time short Christmas tree strategy can be implied. Now come to the credit box spread. So what is a credit box spread? So this is one of my favorite strategy. So what I used to do here, or what you can do in this case, you need to sell a lower strike in the money call option, and preferably you can buy a in the money call option also. By this process you can receive some credit. Suppose Nifty is at 14,200, you can sell 13,500 call and buy 14,000 call option, so you receive a credit. Same process you can follow for the put options. 15,000 put options you can sell, 14,500 put option you can buy, and this should be one lot each. So here your maximum profit will be if the Nifty fall below 13,500 or move above 15,000. So if either of these cases happens, then you will be at a maximum profit. But here there is a catch. You need to look into the profitability and the liability. These two things. So I'll just go to the clear cut example of this particular strategy. So I have just opened off the NSE site. I have I have taken this option chain of February. So here if you just look into the 13,500 call options and 14,000 call options, there is a 500 points of difference. 13,500 call option is here, 14,000 call option is here. There is a 500 points of difference, and I am taking the last traded price. This is being traded at 910. I'm selling at this 910. So tomorrow when market opens, the things will be different. You may get a different strike. So here 14,000 strike is 545. So 545. So my net credit what I am receiving here, 10 5 as 5, here 6, and here 8 5 as 365. So this 365 is my maximum profit, and my liability is, so 65 to 3500, so 135 is my liability. If and my profit I can get 365, means if the Nifty fall below 13,500 and I can enjoy 365 points of profit. If Nifty never fallen below 1400 and maintain above 1400, by expiry, I'm not going to hold this strategy till expiry. I'm going to take the budget days volatility actions profitability. So here we are talking about the strategies which we can initiate just before budget day, hold the budget day, on the next budget day following the budget day, or towards the end part of the budget day, we can close that strategy and make some profit. So here call side, if we are forming the box spread, half box spread in the call side, we have a probability of making the profit of 365 and probability of loss is 135. Same process if I can follow for the put options. So how much profitability and liability is there? So here 14,500 and 15,000 I am telling you. So 15,000 is 808 and here 474. Both in the money put options. So here 808 and 14,500 is 474. 474. So if I can less it here, so here 4 and here 10 7 as 3 and here 5 for us 5, 14,500 so let me 15,000 and 14,500, 474, 474. It is not 5, it is 4. So 474, 7 for us 3. So 334 rupees if post budget or during the budget time. If Nifty manages to go above 15,000, my reward will be 334 and my liability will be, so if I can less it from 500 minus 334, so this will be my liability. So I have to make it as 1 to 1.5 as a risk reward. So here 10 for at 6, here 9 6 at 9 3 at 6 and 4 3 1. So 166 rupees liability, 334 rupees reward, and here too also 135 liability, 365 reward. So here this is the things we are getting. So we are initiating both. We are initiating the calls side as well as the put side. So here what happens in the box spread, if in one spread it is giving you the risk is a reality, then other spread the reward will be a reality. Means if the risk is triggering in the call, means 135 you are losing, then in the put side 334 you will be gaining. So same process, if the put side liability, which is 166 rupees, if you are going to lose, this 365 rupees you are going to gain. So this is the maximum I am talking about. So, and moreover, these particular strategies do not estimate end to end. Means many of the traders, what they used to do, if I hold this strategy till expiry, what will happen? Why you want to hold? It is a budget day strategy. Means on the budget day there will be a huge oscillations. You want to take the benefit of that. So hardly you can wait for that day or the next day and come out. You are not supposed to hold this strategy till the month end. If you can say, if there is no volatility in the budget day, many years it has happened like that. Many years you have seen here, there is no absolute movement at all. You can say only 0.1%, 0.4%, 0.6%, 0.10%. So 2018 also it is a flat movement, 2019 also it is a flat movement. So if such kind of things happens, so you can close your strategy and come out. There is no point in holding the strategies for the next month. So your main aim to take from the budget days volatility. So I have just recommended you two particular strategies for this particular budget day. One, credit box spread. First ask me why credit box spread this time. Is there any specific reason? Or why Christmas tree option strategy this time? Is there any specific reason for that? You have seen the month of November to till date. November 2022, January, January 2021, January 2021. The market has clocked the highest ever FI investment, which is 1.20 crores. It's a great money. November 2020, November, December, January, November 68,000 crores, December 48,000 crores and odd, January still it is 27,000 crore plus. So 1.25 lakhs crores of money is being come to the market here. So here optimism is very high. So here little good news can spark the same rally to a great extent, and little bad news will bring the market to a great extent. So here the two strategies what I am recommending for this particular budget season. One, the short Christmas tree option strategy, which can give you the profit when the upper band is penetrated. Means Nifty goes above 14,500 or fall below 13,900 based on the reference price of 14,200. So tomorrow maybe things will be different. Credit box spread also I have the similar view. So either it can give a great downtrend or it can give a great uptrend. So these are the views, or this is the, because this particular time some amount of realignment is required. This is not the time that market will consolidate. You have to understand this. There is a, when there is a record amount of investment is pouring into your market without having any substantial fundamental changes, yes, there is a change in terms of your forward earnings. So that time expecting a consolidation is not a practical expectation at this point of time. There should be a further up move or should be a down move. Post that only you may experience a little bit of consolidation, not now. So this budget may trigger that. So this particular budget may trigger the further up move or a deep correction. So for that reason only I am just giving you two strategies which can have a maximum profit potentiality in this particular budget season, along with very lower risk exposure. And again I will tell those who have not downloaded the presentations, please download from the handouts section. And when this particular strategy need to be initiated, budget is on the 1st February. So when you want to initiate, can anyone will tell me? Can anyone will tell me when I should initiate this before the budget day? This strategy should be initiated, and these strategies can be hold for the budget day or the very next day of the budget day, 1st February, or you can hold it. If you are getting good profit, you can come out if it is a great amount of oscillation, or you can wait for the 2nd Feb. Do not carry it beyond that. Do not carry it beyond that. Whatever the action has to take place in this 1 or 2 days, it will get, those actions will get evaporated. So you need to take the benefit in this short term price actions and come out from this. So this is these two strategies. Already I have told you, these two strategies are trend neutral, delta zero and theta zero. Credit box spread and short Christmas tree strategies are delta zero and theta zero. And in Christmas tree, 2x approach is maintained to get higher profit, box spread, call maximum profit, or the calls and puts. You can see that everywhere we are getting 350 as average profit. Our average losses is coming around to 160. So we are maintaining a 1:2. So 1.5 should be minimum. So 160 risk means 3 minimum some, or 150 risk means you should get at least 220 points of profit. Here we are getting 350 points of profit. So nothing wrong with that. So here box spread is being formed with a 1 to 1.5 liability and risk, liability and profit potentiality. So if you just wish to get those recordings of 2017 video, you can follow this link, and the hands out section I have given that PDF. Just click on that, that file will get down. Calendar spread, debit calendar spread may not be that much effective, because the pre-events also very important. What happened 3 months before the budget, or what happens, the pre-events is very important. So November, December and January we have experienced a record inflow of the FI money because of liquidity. Whenever the money comes through the liquidity route, that money is not the real strength of the market. So as I said to you, if there is a lot of optimisms are there, if all expectations are met, then you can see a further big rally, or slight disappointment, you can see a deep correction. So you need to prepare for that. So for that reason only, you have to take this particular strategy. Tomorrow, 27th January, we have the same discussion in Hindi. You all are invited for that program also. You have no restriction. You can join that program in Hindi. And the handout section, please visit the handout section, download this PPT, and once this recording will be processed, I will put it in the YouTube. You can see the recordings. And we have scheduled January 31st, our first program, 11 best intraday trading technique. So which you can, all these techniques you can utilize with the help of Excel sheet. And many of you have already registered for this program, and if anyone is interested to join this program, you can register. So it will be a 4 days event, 30th, 31st, 6th and 7th February. So here 11 intraday trading technique we are going to discuss, and all 11 techniques are mathematical, not philosophical. This candle goes here, you do this, or that candle fall here, you do that. It is not that kind of event. All these 11 techniques are mathematical techniques which you need to do some calculations, and from there you need to take a trade call. So here many interesting subjects we have added, like intraday top and bottom calculations. So choosing the correct strike options to buy or sell in the using the volatility, role of IV rank, IV percentile, max pain, all those concepts also there. So if you want to participate in this program, please visit this link in our website smartfinancing.com. Go to the seminar link. So here you can register here. So here also I am just sending that link in the chat box. So those who wish to join that program, you can join. And almost 100 seats are booked now. 102 seats are booked now. Few more seats we have. Till 150 seats we have currently. So anybody has any further same view on the theta. So here these two strategies I have given more emphasis on the delta and the theta. So both the things is neutralized to the level of 0. So here Vega will not spoil your strategy. This box spread and Christmas tree strategy is such a configuration wherein your delta is neutralized to 0, theta is neutralized to 0. So Vega will automatically become neutral. It won't spoil the any movement. So here only thing is that once the price penetrates the upper band or lower band, so in Christmas tree case, in this particular example case, 14,500 above or 13,900 below. In box spread case, 13,500 below or 15,000 above. This particular example, if this penetration happens, then delta becomes a contributor towards the profit. So that is the theme behind this particular strategy. 69.94. Now margins has been reduced for the index options. Span margin concept, credit box spread will be having lesser. Christmas tree can take 94,000. Here two selling sides are there, but here you have in Christmas tree 3 calls to sell and 3 puts to sell. So Christmas tree can expect a higher margin. Credit box spread will take the lower margin. Christmas tree you can have a liability of 10 to 15 point, a reward of 75 point. Here you can get near to 160 to 180 or 170 point of profitability, hardly some 40 to 60 point of liability. So that can be for lot wise. So not it means multiplied with 75 you have to do. So that will be the risk reward for these two strategies. Since one lot is involved, so you'll be having 75 into 175 is the maximum reward you can expect, and here 60 if I can take 60 into 75 as the liability you can expect, and here too also you can expect the similar kind of things. So here 60 into 75, if your profitability is there, so 10 to 15 points I am telling here, 10 into 75 will be your liability. On 29th of January, between the 3 p.m. to 3:30 period, you initiate the strategy. Because first of February, you are going to get the result.